Hello everyone and welcome. First, let me introduce myself. My name is Kennedy from Development Economics class 2016. Today I'm gonna show you my valuation approach of PT Japfa Comfeed Indonesia using a simulation called Monte Carlo. We start today by defining what is capital gain. Capital gain is one of the return that expected by individual investor and institutional investor. Price of an equity-based asset will also reflect its fair value. Market psychology sometimes drive an equity-based asset to trade below its fair value. Valuation is a method of finding fair value of an equity-based asset. So, using Monte Carlo approach, I'm gonna simulate possible outcome and the outcome that more likely to occur. Before we proceed to the next section, let me show you some of the previous research that have been conducted similar to this research. First, Jack Nurminen in 2016, he concluded that based on 100,000 simulation of Microsoft, IBM, and also Apple, he found out that IBM, Apple, and Microsoft is undervalued and have potential capital gain of 93% for Apple and 94% for Microsoft and 75% for IBM. Second, Anli in 2017, she concluded that based on her valuation using FCFF approach, Anli found that Viking Line is undervalued and it should be valued at 23.6 euro back when the market price was 20.4 euro. Third, David wrote in 2001. He concluded that Monte Carlo is ideal methods to use to model uncertainty because it's included some of the uncertainty aspect like random walk that can change a decision of investment up to 28.3%. Then I also included some of the local research like Budi Erianda from 2011. He concluded that based on dividend growth model of PT Telkom Indonesia, it should be valued at 9.750 rupiah per share. Then the second research from the local is Fajar Nopriadi in 2016. He concluded that using FCFA, he valued SMBR at 588 rupiah per share. For this research, researcher got the data from investing.com and corporate website. From investing.com, researcher got the historical price data, and from the corporate website, researcher got the historical financial statement data. After knowing our main goal, the past research, and where the data from, let me show you my approach of evaluating PT Japfa Comfeed Indonesia. First, for this research, I use discounted cash flow. The cash flow that I will use is free cash flow to firm. Then, for the discount rate, I will use weighted average cost of capital. Done with the valuation, let me tell you about the key aspect of Monte Carlo. First, that it should be random. Therefore, to generate random data for random sampling, researcher use the range between function in Excel. So, based on FCFF approach without using simulation, researcher found that the fair value of the firm is currently at 2020. Then, using the Monte Carlo approach simulation with 100,000 iteration, researcher found that Japfa intrinsic value had a minimum value of 1,466 and the maximum value at 2,560. With those range, researcher found that the average was 1,930. Therefore, researcher conclude that using Monte Carlo approach, Japfa is still undervalued. Knowing the result, let's discuss some of the few components of the valuation. First is the income statement. From the income statement that researcher simulate, researcher can conclude that the firm will have positive net income for the next following 5 years, and researcher assume that after those projections, the firm will continue to operate and making profit. Second, let we examine the balance sheet projection. From the projection, researcher assume that the portion of debt will continue to decrease in following years. Therefore, researcher argue that the best way to evaluate the value is using FCFF approach. After examining those two, let's see at the cash flow statement. From this financial statement, we can see that cash position will within the company. We can see Japfa will generate positive cash flow in the future. Therefore, firm didn't have any issue with financing of their asset. So, the suggestion, we suggest that Japfa should increase its sales so it can drive the company value. Besides that, we also suggest that investor buy Japfa because based on our current price at 20 of August 2019, Japfa is still undervalued. So, with that in mind, we suggest investor to buy Japfa with target price of 2020 in December.